Alrighty. Good morning. ¿Cómo allez-vous? Oh yeah, how's your mom? Let me just get up the chat room. Should be launched any second. There it is. Welcome to Trade Non-Farm
Hey guys, how's it going? Today I'm gonna...
Welcome to Trade Non-Farm Payrolls Live, number 145. Hoo-yah, number 145. A little longer than 2 years. Good to see you. Good morning. Yeah. Hello, moderator. Sorry, I'm 2 minutes tardy or 3 minutes tardy. One of those things. Anyways, I apologize. Good morning, everybody. Another great opportunity to be a currency trader. Super excited. Non-farm payrolls, best day of the month. It's also fairly risky. Let me remind you that trading Forex is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. So please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. May the 4th be with you. I even have the May the 4th be with you t-shirt. Nice. Show us your pips. Yeah, May the 4th be with you, everybody. Thank you to FX Street for hosting us for 145 months in a row. Pretty amazing stuff. See, I don't know if you can see that. May the 4th. Yeah, it kind of makes my tummy look big, but anyways, so why am I here? Well, first of all, I want to teach you how to trade Forex. Second of all, I want to help you learn how to harness risk and volatility. It may not be the opportunity you actually want on the long run, but we can cover that. I will answer your questions about trade setups, about scalping, about spot trades, about swing trades, about carry trades, about fundamental analysis, about monetary policy and central banking, economics. I'm studying finance and economics and management at Harvard University, getting my master's degree, so I can share anything about that. But ultimately, I'm trying to earn your loyalty and respect. So if today you are enjoying this webinar or learning something new or picked up a tip or just having fun, would you at least give a thumbs up thingamabob right there on YouTube? It actually matters. And it shows me that you care because it takes like no effort to do it. So if you can't do that, right? But what I would like you to do, either during the webinar or when the webinar is over, visit tradersway.com. Open up a demo account. Takes less than a minute. I'm going to give you 3 hours today. In exchange, I'm hoping that you'll spend 1 minute at tradersway.com. Open a demo account. It's not a big deal. There's no strip search. And it'll give you an opportunity to download our MT4 so you can test out our execution speed and third-party statistics and analysis will show you that we're actually faster than most. You can check out our spreads or fees and stuff like that. Find out we're highly competitive in that area. And lastly, you get world-class customer service. Just give us an opportunity to earn your loyalty and respect. That's all I'm asking for today. All right? And of course, get involved. I'm asking you to do that. Get involved, ask questions. Because really, ultimately, you are the boss and I'm just a humble currency analyst. I have a few years under my belt, about 14, which is about as old as retail Forex trading is. So ask questions. It's your opportunity. Here, yeah. I have a feeling it might be glasses day. So how are you guys feeling? How's trading going? What's going on with your life? Are you focused? Are you happy? Talk to Uncle Wayne, and then we'll jump into the charts. That's not too bad. Okay, for those that are new, I'm going to go through the charts very quickly, just give you a basic overview of what we're going to do as far as technical analysis is concerned. Right? Hack Tech says he's broke. I'm broke. Forex Pipper says, I'm great. Great. Best cigar in, what is that, KL? Kuala Lumpur? Little groggy today, yeah. Ron, I did it on Friday. We covered Mondays and the monthly. Because since the new month was Tuesday, it was basically Monday pivots, and then we talked about that. You didn't get that, Ron? Or maybe I didn't cover it. What? Yeah. Well, yeah, you should have that, man. Anyways, we'll talk. Good morning, Wayne. It's been some time. Hey, Lester. Yeah. Markets are whispering. Well, we had the Fed, and then of course we had, we have the risk event today. But also, and we'll cover this technically, there's a lot of reason technically for the markets to be whispering, as Bubba Pip says. I love you, Bubba. Okay. So Brady Palmer's looking for a good cigar bar in, I think that's Kuala Lumpur, in KL. And I don't know Kuala Lumpur so much. Okay. So anyways, let's go through this, and then we'll go through the charts. I'd like to go through FX Street and see if we can get some data on NFP. Bubba says USD Turkish Lira is going to drop. Great, cool. Let's look at that. That'd be great. I'd be totally happy for that. All right, let's go through the basic setup for everyone that is new. Bubba Pips is Georgia Matt. That's a good name. Are you guys brothers? We're not of relations. Yeah. Cool. Now, first of all, how many people have attended at least 10 of my non-farm payrolls events? I just want to see who's experienced. Okay. And while you do that, let's go through the charts. The basic setup, I use a 21-55 EMA combo to represent the speed of the market. It tells me the direction in which the market is going and ultimately how quickly it's getting there. Now, what do I mean by the market? Well, what I mean is what's the general direction of that chart. Okay, the general direction. So one way I like to answer it is, people often come up to me and say, so, how are the markets doing? Hey, were the markets up or down? So however you define that, right? So even on a 15-minute chart, that covers a lot of time, right? But you can still say it's generally up or generally down, right? Now, the importance of that is it sets my bias for that time frame. I'm like, oh, look, I'm a bear because the market's bearish. And plus, you really don't know what kind of strategy you're setting up if you don't have a general bias for the market. So, for example, the trade you're about to enter, is it a trend trade or a counter trend trade? Well, if you don't define the first part, what direction is the market going? Well, you don't really know. Okay. Martin says 8. Really? It's only 8? Cool. Has anyone attended 100 of my non-farm payrolls events? 100? Okay. All right, so with that established, the market is bearish. Then I want to sell, right? Ideally, if you're a trend trader, I'm a trend trader. I can describe myself as a trend trader. So if the market is bearish, I want to know, well, when do I sell? Because the next part is, even if the market is bearish today, there are plenty of times throughout the day in which price is actually rising. Yeah, DeVista, yes. James Wood, absolutely. There's a lot, yeah. Lots of people have attended more than 100 events. Thank you, guys. Appreciate that. Thank you for your loyalty and respect. I do appreciate that. Now, there's 109 people watching right now. May I please request from you the thumbs up? It's a small request, if you would. All right. So anyways, with it established, even though price is moving up and down, the market might be generally bearish. So the whole purpose for using these moving averages is to first say, okay, the market is bullish or bearish. And if it's bearish, then I want to use other moving averages to say, well, when should I sell? When should I take profit? When should I sell? When should I take profit? Yeah, Ed, since 2008, yeah. Cool, right? And then the rest is just all timing and stuff. And so we'll go through that. So here it is. Let's expand this, and I'll go through this quickly. A lot of people have seen this before, so we'll go through it quickly. 21's below the 55. You can see we started out the day here, already bearish. That's the most important thing. You might look at this chart, and you're interpreting it one way, but just imagine all you saw was this corner. You woke up in the morning and you said, well, I guess I'm bearish today. And of course, it ended up being bearish. Now, if it had crossed up, then the market is technically not bearish, but technically bullish. And that would get you to start looking for opportunities to buy instead of sell. So right now, you only have permission to sell. Okay? But you can see it's only helpful generally. It's sort of like, where's the net? You know what end of the field to shoot at. But other than that, there's more to putting the ball into the net, right? So that's why we use the 5-8. In this case, if you had started the morning already bearish, then this 5-8 cross down is your trigger. Okay? So that's your sell. So again, you already were a bear, and you would have been a bear over here and over here and over here. I mean, you would have been a bear yesterday. You were a bear, now you're a bear this morning. So you're looking for these 5-8 crosses. In particular, this would have been before the London Open, right? Not cool says, what time frame of this chart? Any time frame you want. Because even if you're looking, let's say, at a 15-minute chart, and the 21 is below the 55, well, on that time frame, the market is down. Maybe different on a 4-hour chart, right? You know what I mean? It may be different on a 4-hour chart, but that's multiple time frame analysis, which we can cover. Okay, Nakul, if you ask later. Yeah? Okay, cool. So that's that. Now, when you get in a situation where the market is falling, but price is braiding like this, this is consolidation. And you don't want to trade in that. And what's really happening is the market's moving sideways until it runs back into the moving averages. And the theory here is there's a higher likelihood the trend will continue to the downside. Okay, right? Now the other thing, here's the other written rule here. If you're below the 21 and the 20, right, you're aggressive. So here you're aggressive. if the 55 is in control, it's a hint. It's telling you that the market is still technically bearish, but the market is slowing down. Okay. Francois says, what pair is this? It doesn't matter what. This is a PowerPoint slide. Okay. Any pair you want. Went through that movie, right? Any pair you want. What do I get for $2? Anyways, so the fact that it's kicking off the 55 should be a sort of a red flag. It should be something that you notice and you change your expectations. In this case, if I find the 55 is in control, and that is a subjective thing, right? If I feel the 55 is in control, I should start looking for double bottoms or reversals at obvious levels of support. Okay. Okay. We'll put this together quickly. The 200 EMA I use as long-term trend. I also call it the fair market value, is how I describe it in my book. Bollinger Bands. If you need help with volatility, I use Bollinger Bands for that. Probably not that important for today. Okay. I also use oscillators. This is the MACD. And the trick here is I slow the MACD down, because I'm using it to discern overbought and oversold conditions for the market in general. So the market could be falling. So do you remember when the 21 was below the 55? This is the same chart, right? Remember how the 21 was below the 55, but after the big drop, everything started to move sideways? Remember the 5.8 was braiding? Well, look what the MACD is doing. It's actually rising back to the waterline, and that is also a clue, okay? And that's showing you that the angle of separation between the 21-55 EMAs are diminishing. And that's an important clue to stop trading. Because ideally you're trading when the MACD is below the waterline and falling, right? This was almost a sell, and then this was a sell, okay? Now we also use the stochastics. I speed the stochastics up. And what that does is gives us overbought and oversold conditions for price. So now I'm looking basically at the 5.8, and I use this as a trigger. Okay? You'll see like this, for example, way overbought and then dropped, and that helps you qualify that particular entry. Okay? So we'll do the new scalp setup later. I just wanted to explain the charts for all those who are new. And again, for everyone that's attended somewhere between 1 and 144 other events, thank you for being here again. Now, just a quick sort of raise of hands. What currency pair do you want me to cover most today? What is your favorite currency pair for trading? By the way, it's my breakfast time, so I hope you don't mind that I snack before the event. It's not a breakfast bar, it's a protein bar. I like to think of it as candy with candy on top. I live in America. Everything's full of sugar. It's healthy. They don't even show the chocolate on the packaging. It's really hard now to just buy granola bars without candy all over it. All right. Rupee, sorry. I do not have the rupee. Not cool. Euro dollar, USD CAD. Yeah, there's been some nice setups in the USD CAD. Euro and the yen. Euro and the yen. Nice. Euro dollar, dollar yen, Turkish lira. We should definitely do Turkish lira. What about your peso? Set up last week, didn't it? Oh, there. Alan says peso. Okay. Switch to dry fruits. Well, I have apples and bananas. Thank you. Currently bullish, 15-minute charts, easy scalp. Yeah, well, Caribbean guy, the only thing is, you know, you'd have to want to be a pure short-term trader going into a high-risk event. So, it's your call. So I'll get this out of the way. Well, a lot of people said euro dollar. Somebody asked me yesterday to do euro kiwi, and I'm like, really? So, what do you think of that? So we'll just start with euro kiwi. Nobody asked for euro kiwi, so why not do it? Somebody asked me on Friday. No, today's Friday. Someone asked me on Thursday. I did a YouTube webinar on Thursday, and somebody said, how about euro kiwi? I'm like, euro kiwi? Okay. So we were here, and I said, well, it's been falling for a day or two. So it should stop falling. And now it's double bottom, made a higher high. But if there are bears still on this market, that's your sell zone A right there. What I'm suggesting here, if one of these provide a bounce and you want to be a bull, because I think this person was a bull, you could look for the double bottom and trade the double bottom, or you can wait for the higher high and then catch the retracement. I prefer that one. But now you see how now it's already set up, but you're not on the free and clear plan until you're above this support and above that resistance. So really, I would have it marked up kind of like this. Okay. And really what I would prefer is maybe this tops out, this drops, and the entry would be on this retracement. Okay. But you know, 18 hours has gone by and it's done generally what we asked, right? Is that right? Forex Pipper says, only eat fresh fruits on an empty stomach. You know, I almost only eat fresh fruits on an empty stomach. I'm just worried with a three-hour tour like today, that my sugar levels will get lower halfway through. So I'm just eating this now, but typically I don't. Thank you, doctor. All right, so euro kiwi. But I think we should probably set up euro dollar. So let's talk about euro dollar, and then we'll go over to do some analysis of the potential NFP numbers today. Now, Caribbean guy, where in the Caribbean are you? What island are you on? What's your rock? All right, so here we are in a 4-hour. We are at support. This is the predicted bottom for euro dollar this week. So that's the bottom. I cannot sell that. Okay? So now what? Well, I can't sell it. So, oh, nice. So anyway, so we're looking at this and we can say we can't sell it. Now, are you okay going through non-farm payrolls and perhaps not selling euro dollar completely? Even if it falls, are you okay with that? Okay. You have to ask yourself that now. It is the projected bottom and we hit the bottom and we respected the bottom. So are you so aggressively bearish that you're willing to sell it? You can be, okay? But in your analysis now, in your technical analysis, you need to still have some rules of engagement. What you're trying to do with your aggressiveness is sell it off that 21. Okay, because remember, earlier I told you when the 21 crosses below the 55, you should be a bear. Remember that? And then I said, when price is below the 21, you need to be aggressive. In fact, what you want to do is use the 21 as a dynamic level of resistance. So check this out. 21 drops below the 55, you're a bear, right? Down, 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 up, up, sell, down, 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 up, up, sell, down, 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 up, sell, down, 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 up, sell, down, 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 up, sell. Okay? Now the interesting thing is that's the strategy that I put in my book 10 years ago. It was published, which means I wrote it 11 or 12 years ago. But to be able to have that strategy already mine, I was trading this way 14 or 15 years ago. Holy smokes, right? Seems elementary, but so many people don't do it. Okay? 21 drops below the 55, and now I'm simply selling rallies. Okay? Now, as easy as that might look on a 4-hour chart, there's quite a bit to timing these things, right? But that's why I explained to you, well, one way, there's more than one way, but one way you can do this is using the 5A, right? So 21.55 crosses, sell the 5A cross, sell the 5A, oh, take profit, sell the 5A cross, take profit, sell the 5A cross. Okay? Interesting, right? But by the time you sell the 5A cross, you're doing it now, you're about 4 to 6, maybe 8 hours late, right? So what you end up doing is moving to smaller time frames. What's better is to say, all right, we're approaching the 21 EMA on the 4-hour. What can I do on the 15-minute chart to get me into that? Maybe that's where you're selling the 200. Okay? Okay, see that? You're trying to sell it up here. So I call it cutting corners. But it's really a strategic top level, top down type thing, right? If you look at this chart and you say, I want to be a bear, you're done. Well, actually, I shouldn't say that. You want to be a bear, and then you say to yourself, I want to sell a retracement back to the 21, similar to these previous ones. Justin says, did I hear it wrong? It's the 5 and the 8 cross. That is one way. Yes, right here. Sell, take profit. Sell, take profit. Okay? Yeah, I'm getting old, I know. I don't feel old, but it is weird. Strange. Okay, so that's one way of doing it. The other way of doing it is, as you retrace back to the 21, remember the 21's lagging, right? So as it's retracing back to the 21, you can say, okay, I'm a bear. We're below the 21 EMA. 21's below the 55. I'm a bear. I want this to go up, and I want to sell a green candle. I don't want to wait, however, for a 5A cross on a 4-hour. Do you understand that this took 1, 2, 3, 4, 5, 6, 7 candles, eight 4-hour candles? I mean, couldn't you get in a little more quickly than wait an entire day if you already knew you were bearish and you were already near resistance? So what I'm saying is you decide you want to be a bear. You decide that you want to sell high off the future 21, like shooting in front of a running deer. I'm 45. Then what you need to do is you could drop into that smaller time frame and say, all right, I want to sell off of this resistance. And look how close it ends up being. Okay? And you're like, well, a lot didn't happen in there. Okay? Well, at least cut the corner and say, well, right, on the 1 hour, the 55. Okay? And so maybe you're selling this 5A cross or something like that, okay? But you're using these other levels to say, I'm selling here with the anticipation that it actually ends up being this. Okay? Does that make sense? You're selling here because of what you see here. That's the whole multiple time frame thing. So you say on this time frame, I'm a bear and we're near the 21, so I'm getting ready to sell. Then you drop to a smaller time frame and you look for reasons to sell. Okay? So for example, like if I was looking for a reason to sell, I would have marked this as support. I would have marked this as resistance. Okay? And you want to sell it high off the resistance. Okay? So long story short, we are at support. You need to be worried about it, even if you're an aggressive bear. Okay? But if you are going to be a bear, you need to sell it high. And you need to get through this monthly pivot. You need to get through this weekly pivot. And your best target today is probably 1880. Okay? Maybe 1850 if there's a ginormous bearish move. Caribbean guy says, how often do I do these webinars? Well, if you visit tradersway.com, and we're a local firm for you, every day, if you're a client, you just sub. Cool, but you're subbing at FX Street. All right, can I please get a thumbs up? Please. Pretty soon I'm going to jump in to show you how to do the scalp for the news. Then the news is going to come out. We'll look at those opportunities, and then I'm going to dive into things like carry trading or swing trading or fundamental analysis, okay? Okay, so anyways, I think the best target you have as a bear today would be like this. But you understand that it's unusually risky, not just because of non-farm payrolls, but you should be getting out of your bearish trade. So if you sold here 2 weeks ago, I would still caution you. This is the weekly target and the monthly support pivot. Okay. Okay, you see that how important it is to have that cluster? Supremely important. So there's really, if you don't look at the pivots, all right? So let's go here. Let's see if I can shake this up a little bit. Let's do it this way. Okay. This kind of looks like it might fall forever, doesn't it? Wrong. There is unbelievable resistance right here. Or I should say support, right? And then the next level of support's way down here. It's way oversold. Okay? MACD's at waterline. Okay? Should you sell here? Is this what you've been waiting for the last few days? You're like, oh man, I want to drive it down to 119.5 and then sell it. If you think that's a bad idea, then acknowledge it. You can be a bear. I don't care about that. I don't care about your bias. That's up to you. But you can at least say, look, my job isn't to wait for it to fall to the 200 EMA and then sell. Well, what if it falls further from here? Who cares? Why do you care? Right? Let it fall. You need to say, as a bear, you find that risky, and even if it falls, you're like, well, I don't want it. I don't want it at this price. That's the better thing to be able to say. Oh, it's falling and I'm a bear, but I don't like these conditions. right? Now, Kevin says, well, what about a head and shoulders? Okay, well, that will be hundreds of pips away. I mean, now we're looking at a daily chart, but now you would need like this and like this. So you're talking June, okay? But yeah, I'd rather sell it at this price here than here, right? So just put yourself in control and say, look, I see it falling, but I don't like the risk associated with those pips. I only like the easy pips. Selling at support, right? Selling at a 200 EMA, selling at support might just be dumb. And you're like, and mama didn't raise no fool. So even if it does red on the news, just remember it's short-term volatility. Do you want the short-term volatility, which has its own risks, unique to a high volatility event-driven strategy? But even on top of that, you're selling at support and hoping it goes lower. Maybe your rules of engagement say, no way, Jose. That's not how you trade, okay? Now, reverse this. You might be a buyer, and you're like, ooh, look at that oscillator. Ooh, look at the 200 EMA. Ooh, look at the role reversal, okay? And a bear might do this. All right, sorry. A bull might do this, okay? So as a bull now, I would have two trade plans. I'd say as a bull, I want to buy it here, or I want to buy it here. And I like the oscillator for that purchase. The 200 EMA to me is not an entry. It was a target when we were falling. But that is a role reversal, okay? So if I was a bull, I would look at this and say, well, maybe I buy it today. Maybe NFP goes my way and we end up buying it. And if I'm a bear, I'm like, well, even if NFP goes my way, I can't sell it here, so I'm done. Now let's add another layer of this to this. Let's do this one. Okay, see this green area? Right, there's only one green area in all these lines. I know there's lots of lines. I'm just trying to make a point. What does that green area mean for a bear? Stop trading. You see that? It means stop trading. So as a bear, stop trading. That's how I interpret that. But as a bull, I think to myself, well, if bears do their job, they're supposed to stop trading. So now maybe that creates an up opportunity, especially if NFP goes your way. Maybe you get an up or a down, okay? Just be careful because wherever the old resistance is, you're going to have sellers. So there might be a pop and a big drop, and then we buy it back on Monday. You got to be careful, right? So there's that. Let me change the template now. What about this? Do you think this line is important to this consolidation? If your answer is yes, because remember, I had this line drawn 5 days ago. I knew this price 5 days ago. Then price fell and stopped. So clearly, I think the way I interpret this is that other people also knew that price. So this price seems to be important to the euro dollar, which is 40% of the entire Forex market. This is $2 trillion, right? So it's enough to stop $2 trillion. So what does it mean? What is causing this consolidation if you believe this line is the cause? Because remember, I knew that line, I had that line there way over here. That line was in the sand. So I think the way I interpret that is other people are paying attention to this line too. So what does that line mean? That's the monthly support pivot. The monthly support pivot. Sandil, this is euro dollar. Let me help Sandil. I'm going to overlap them now. Does that help, Sandil? So now we have, let me highlight that line now because it's inside the green zone. So do you want to sell at monthly support that seems to be holding $2 trillion worth of business activity at a halt? That's your judgment call. I say, no, that's not really the conditions I'm looking to sell. Do I want to sell in a green zone in which I believe bears are supposed to take profit? Like, well, why would I sell if I think the other people selling are getting out? Why didn't I sell high? Like, who sells low? Why didn't you sell high? I mean, this is, right? So that kind of thing, like, you're waiting for that? That's what you're looking for? Hopefully not. So I take all of that and I say, well, if I were me, I probably wouldn't trade this. I don't care what happens. If NFP comes out and euro dollar drops 100 pips, I could just say, whew, that's amazing. And be comfortable with that. I can always sell it on Monday or Tuesday or Wednesday. Do you ever watch Talladega Nights? If you ain't first, you're last. And his father says at the end, he's like, well, that's ridiculous. Spoiler alert, by the way. Spoiler alert. Well, that's ridiculous. You could be second. You could be third. Well, hell, you could even be fourth. Right? So you don't have to be the first one selling it. You just catch it on Monday or Tuesday. Shoot. You might sell it on Wednesday. Right? So bear that in mind. Now, as a bull, I take all of that in reverse and say, wow, if this pops, I might want to take on the risk of buying this. But guys, ladies and germs, there's resistance there. There's resistance here. There's resistance here. There's a lot going on. Okay? And can we at least agree that you would end up being a bull in a bearish market? And if you agree with me on that, then what you really need is a much bigger move, right? Before I become a bull, I would like, next week, for example. Wow, that's not quite right. Let me turn that off. I have to. Okay. Next week, what would I like to see, Wayne? Maybe next week, if I'm a bull, I look for, yeah, I guess something like this would be acceptable. Okay. Okay. And by the way, bulls, right? By the way, bulls, this is a terrible bullish entry for the medium run. So I would really predict sideways action from here. And by sideways, I mean, let's say the bottom is 1950. The top is going to be 23. So between, let's say, 119 and 123. You're like, well, wait, that's 400 pips. Yeah, but I'm talking between now and all of summer. Between now and September, we might be in that range, okay? Okay? Or I let it fall, right? Romnick says, bad idea. Well, I don't know if you're commenting on this. I'm not predicting this. You have to understand, I don't predict anything. In this case, the technical analysis tells me this is a horrible place to sell. I have to recognize that even if I'm a bear. But if I'm a bull, I have to ask, well, do I buy a triple bottom? Well, that's a short-term scalp. That should work. And then what should I do if I find myself at 120 again after a higher high and it's Monday? Well, that's also another place I could buy, especially a higher high, higher low 1, 2, 3 scenario. And that predicts this move, which then just kind of gets me to the next step. So it's like, what do I do if it goes up from here? What do I do on Monday? What do I do on Tuesday? If then type statements, okay? Great. By the way, guys, thanks for logging in today. I appreciate it. If you're enjoying what you see here today, I do this every single day for free for Traders Way clients. If you'd please visit tradersway.com and open a demo account. Just give me an opportunity to earn your loyalty and respect. Okay? This is the 145th month in a row I've done this webinar. And many people in this room have attended more than 100 of them, maybe even close to all 145. So, let's fall in love, huh? And also, guys, can I get a like, please? I mean, come on. 300 people watching and 66 likes. Just click the little thumbs up thing. I'm assuming you're on YouTube. Maybe you're not on YouTube. Maybe I think you should be on YouTube, right? Thank you, Caribbean guy. Appreciate your doing that. All right. Let's also today, I propose we cover oil and gold, the dollar pairs and the yen pairs, and then we could also cover high yield pairs. Okay. Zahid Khan says, how? I think you're asking me how to click on the like button. If that's the case, don't worry about it. Hey, Michael. Michael says, first time here. Right on. Where have you been the last 12 years, huh? Oh, I see. Some people are watching this on FX Street. Is that what it is? All right. Kevin says, Aussie dollar, USD peso. All right. Well, let me do this. Let me triple check. I'm going to use tradethenews.com so that we can get the number live. They're a service that I've been using for, what, 13 years? And it's not a paid placement or anything. It's just somebody I use. Yeah, okay, yeah. So you guys are on FX Street, but then I get it. All right, cool. All right, so we'll get the number live from tradethenews.com. That's cool. The one thing I need to bang out really quickly is the methodology for the high volatility event-driven strategy. I published this maybe 2 years ago, maybe 3 years ago. It might have been 4 years ago on FX Street. There's a report there I broke down. It's called How to Trade the Employment Situation Report. No, How to Predict and Trade the Employment Situation Report. Okay, and I give 2 strategies in there. The high volatility event-driven strategy. And then I give the counter trend trade and some tips and all that kind of stuff. I'm assuming you've used that free resource. We'll have time to go back, usually have time to go back and look at the counter trend trade. Sometimes it comes quick. But we'll go through the scalping part, but there's more to it than that. And by the way, it's just a scalp. Okay, just a scalp. It should be a very small part of your repertoire. Okay, and we can talk more about that. There's still 2 hours to go in this webinar, guys. So thank you for being involved. Now, the first thing that's going to happen is NFP is going to come out. I know what you're thinking. If you're new, you're saying, well, Wayne, what chart is this? 148. Well, it might have been old euro dollar. Okay. Second of all, you're like, what time frame is this? 1 minute chart, guys. It's a scalp. What do? You scalp on a 1 hour chart? No, it's a 1 minute. It's a scalp. High volatility event driven strategy, aka scalp. So the rules of engagement here. If the market takes it bullish, you're bullish. If the market takes it bearish, you're bearish. So imagine this. News comes out, green candle, green candle, green candle, green candle. Guess what? You're a bull. We can talk about the stock market later. But I can tell you the very first stock I ever purchased to invest in was Apple Computer, and I paid $6 for it per share. That was the first stock I ever bought to invest in. Yeah. The first wine I ever bought to collect became Wine Spectator magazine's Wine of the Year and made the cover. The second wine I ever bought to collect became the first cult cab of Napa Valley. So I got like winning streak back in the 90s, man. Winning streak. Anyways, so green, 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 guess what? You're a bull. But you need to have the patience and discipline to say, okay, it's green, but I don't buy high, I buy low. So you actually need some red candles here, right? So what you want to do is look for this red candle. Oops. Look for the red candle. All right. And set up a Fibonacci retracement. Now, very often I don't really have the time to draw this for you. I'm going to try to draw it for you. But you may have to do it yourself. I'm sorry. You also want to look left and see that this old resistance may become support. So this whole area right here is the most ideal place to buy it back. So up, 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 down, down, buy. Now in this case, it wasn't a perfect. We got a 786. But you know, this candle held, the next candle held, the next candle held, the next candle held. At some point you need to get long and drop your stop just below here. And typically 25 pips is way more than enough for the scalp. So if you lose more than 25 pips today trading, it's your own downfall. You're not listening to me. You're not listening to the rules of engagement. Okay? So up, 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 down, down, and then boom. And you got to be fairly quick because it's a scalp. You don't have time for committee meetings and group hugs. A few minutes later, like 5 or 6 minutes later, you should be able to move your stop to break even and remove the risk. And the reason for that, as you approach this old line in the sand, one of two things are going to happen. It's either going to make a higher high and you get paid, or it's going to hit that resistance that already rejected price, and it'll reject it again, and it'll drop. Well, you don't want to lose money. You want to have the opportunity. You want to take advantage of the free look at the basket, but you might miss the shot. Okay? So in this case, when you approach here, jam your stop at break even, you're hero or zero. The opportunity pays off if it goes up, or you lose nothing if it collapses. And that's what a scalp is all about. And in this case, she breaks. Okay? So let's move to tradethenews.com. Thank you everyone again for coming to the event. I appreciate you. Please show your loyalty and respect by visiting tradersway.com and opening a demo account today. And if you do, you can
30 seconds, 30 seconds, looking for 192,000 on the non-farm payrolls.
If you do open a demo account today, you can attend all my webinars like this, an hour and a half a day, all next week for free. Huh? Monday, Tuesday, Wednesday, Thursday, and Friday, just you and me, babe.
10 seconds. $164,000 a miss. Back month revised higher to 135,000. Unemployment rate 3.9%.
3.9.
Down 0.2.
Oh, 3.9.
Wage data 2.6%. 1/10 below expectations. Average hourly earnings holding flat at 34.5.
Wages.
Again, 164,000 a miss, but the back month was revised higher. The unemployment rate fell to 3.9%. The U6 fell 0.2% to 7.8%. The participation rate was down 0.1 to 62.8%.
Range bound,
wages, the 2.6% was 1/10 lower. The back month was revised lower to 2.6%. In that 3 handle on the unemployment rate, the first time since May of 2001. So on that front, the labor market continues to tighten. We saw the U6 fall to 7.8%, and the participation rate fell to 62.8%. Wow. But again, a miss on the headline non-farm payrolls at 164,000, though the back month was revised higher.
All right. This is wild, okay? Wild and crazy good stuff. All right. Miss on the headline, which tells the Fed they can't raise interest rates in the future, or beyond June, they should be cautious. because they will raise in June, but then after that, maybe they're cautious. But then last month was revised higher. So it's good news and bad news. Wages were flat, but the unemployment dropped to 3.9, which is below the 4 is a big deal. So then you're like, a big deal about that. But then how did that happen? Well, the workforce participation rate fell. So it's like gobbledygook numbers, guys, gobbledygook numbers. So expect up and down and sideways, because it's going to be a confused market. Okay, if you're going to try the rules of engagement here, that's the area, but it's going to be it's a weirdo. I mean, you can do it like this, right? Come on. It's a weirdo report. I wouldn't expect much love out of it, but again, it's a scalp. Who cares, right? But that's a weirdo scenario. Everything is gobbledygook. A miss on the headline, an up, right? Let's say a down on the headline, an up on the revision. I guess what would you say? Like an what does that say? Argentina raises interest rates to 40%. What was this that just came out? That's got to be a mistake. Argentina raises interest rates to 40%? Is it 40 or 4.0? Come on, Trade the News. It says 40. Third hike in just days. Really? Oh my gosh. Yeah. Wow. Go Argentina. Anyways, what was I saying? Oh yeah. So like the 3.9 suggests a good thing. Like a 3.9 on the unemployment rate might be good, and you might think it's inflationary. But then you're like, but less people are looking for jobs, and then all of a sudden you're, well, that's deflationary, and it's just gobbledygook today, guys. So expect this to go up, and then expect it to go down. Because the reason I say that is bulls are going to buy because they're bulls. And then it's going to go up, and then bears are going to sell because they're bears. So, gee whiz. Gobbledygook, gobbledygook, gobbledygook. Clear as mud. Anyways, so I think I'm going to go to Argentina and put some money into a bank account. Holy smokes. 40%? What is that? What's going on in Argentina? I studied the entire history of economics, by the way, quite literally the last 1,000 years of economic history globally. And it was interesting where just 100 years ago, let's say before World War I, so almost exactly 100 years ago, Argentina was like the 6th richest country in the world. It was pretty amazing. It should be like a Canada, right? Kind of thing. And all of a sudden it's like, what? But that's what happened. Latin and Central and South America adopted socialism, and well, they paid the price. There you go. Think of all the rich socialists. There's so many rich socialists. All right. So we're moving along, making money, honey. Let me just clear off. Let's just do a really clear template here. Let's just do the old template. Let's just scan it. And I'll put it on a 5-minute chart, maybe. Okay. Okay, so we're approaching the line in the sand. Rules of engagement tell me I need to move it here. So I cannot lose money now. Oh, group hug. Oh, I love it. Can't lose money. Might make money. Great. Let's do this all day. I'm thinking it's going to drop on us. It's going to hit resistance and collapse big time. So where is that going to happen? You know, this whole area, man. This whole area. And don't be shocked if we're down here shortly. And you can see why it looks like I'm in the middle now because of the scalp. It took off, came back. Right? You guys remember? I basically bought a 618 Fibonacci retracement. Up, down. So I bought the 618. Now it's going up. I wouldn't be shocked if we're way back down here and then way back up here by the end of the day. And that's why I'm like, you know what? This is as clear as mud. So I'm jamming my stop and taking a walk. If it breaks, great. I get paid. Who cares? In fact, if it breaks to the upside, I might stay in it for the 400 pips. Remember how I showed you this should, if things turn around, and let's say the world assumes the Fed's not going to raise interest rates 3 times this year, maybe it's only 1 or 2 more times, then and things change, then maybe this goes up to it goes up 300-400 pips. I can't lose money, so why would I want to pick up 30 pips? Who cares, right? But I don't think that's going to happen. This is going to come down, and I had a free shot at the basket. Take a shot. I had a coach say, look, you're not going to score any goals if you don't shoot. So if you're open, take a shot. Put a puck on the net. All right. Hey, can I get a thumbs up, man? We took a trade. I jammed a stop. It's hero or zero. I did exactly what I showed you in my PowerPoint presentation. It went up, came down. I bought a 618. It went up. I'm up like 20 pips or something. I jam my stop as we hit the line in the sand. If it breaks, I get paid. If it doesn't, I don't lose money. Can I get a like on that? Come on, a little thumbs up thingamabob? Please? Make me beg. Please. Let's do a quick look around the world here. Okay, let's start top here. Aussie versus USD, slamming into resistance. Whoop, okay. Here's the interesting thing. So some people might be wanting to buy it now. You can see on Tuesday I had it set up as a buy. Where were you on Tuesday, bro? Okay. I always kind of chuckle to myself. Now you want to buy it, right? Now you want to buy it, right? So what does this green zone mean? We covered this earlier on the before the news came out on a different currency pair, of course. But we looked at this and we said, well, the green zone is where bears get out. Well, if you're a bull, so now you're a bull, right? Well, you could have been a bull here, or you could have been a bull on the double bottom. Or you could have looked for a retracement after the higher high. This is the 1, 2, 3 hammock roll reversal scenario. So, and you could have been a bull here with a stop below this. You could have been a bull here with a stop below that or that, right? Right? And so it's just funny. Now that it's happening, you want to be a bull. And I'm like, well, when you're that late and that reactionary, people take advantage of you. So you might see like the market drop down here for one more test of this, and then it goes up. And if you had entered properly at support, your stops below here, you would have been just fine. All right? Yeah, 3 times since Monday evening. Yeah. Oh, thank you, moderator. That's the link. So is this chat and the video playing on FX Street? Like they can see the chat? I don't know how to do that. That's interesting. Baystar or Bastar, Thanks again, Wayne. As always, have an appointment. All right, take care. Cool. Oh, did it collapse already on me? Look at that. It already collapsed on me. Told ya. Well, I'm good. I'm glad I got out. Oh, look, it went to the bottom, right? Look at that. So it went to the bottom, which we expected. This is why I removed the risk, guys. I don't want to lose money on a silly little scalp. But look at our support holding. Okay? All right. So there's this. We're dealing with this volatility now, right? Peter says the chat works on FX Stream. Wow, I don't know how you do that. That's interesting. So it's the same chat and the video. You just can't do the thumbs up thing. Oh, that's interesting. Didn't know. All right. So we have that. So let me go back to our official layering of this, right? So there's the shorter term support and resistance. Okay. By the way, and yes, if you're a bull, you're allowed to buy at support. I don't think I need to say that, right? Or do I? But you could. But let's change the template again and look at it from a higher point of view. It's not a good place to sell. It's not a good place to sell. Even if it drops a bit, it's not a good place to sell. And there's your monthly support. So maybe as a bull, you try again, or it double tops and then pulls back, and then you try again, and then you try again, or you try again, or you find something better to do. Okay. But you notice how I recognized the risk and I removed my risk? That is the key. If it was a swing trade or something, I wouldn't have been so frightened, right? I mean, that jamming a stop like that quick, obviously it's based on fear, right? Now, when I trade like swing trading, I don't have any fear. But in that case, like, I don't want to lose money being whipsawed on volatility. Oh, it's just, so I'll take the shot, but remove the risk. Barry says, what? Barry, what? Barry, what is Barry? No, I guess I missed something, Barry. Not sure. All right, so let's take a look. Let's do some gold. Let's do some oil and all that kind of stuff. Okay, sorry, yeah, Rob. About sorry, I didn't know that. That wasn't communicated to me, so I didn't know. Sorry, guys. All right, so let's. Well, first of all, do you see what I'm thinking here? In March, I said it should go up. March 19th, I said it should go up. March 29th, I said it should go up. April 5th, I said it should go up. Okay. Now in here, it's like I'm not saying it should go up. I'm saying if it goes up. Right, you can see how I'm playing off the resistance. Obviously, I'm not ignoring that. And you can see here, kind of, if I move this, on a smaller time frame than a daily, I would have said, well, wouldn't it be great if it came down and then broke out? Okay, so right in this period is when I started to not be right anymore. Down, 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 down. Does it change anything for me technically? No, on this time frame, I'm still suggesting that at some point I would like to be a bull. Okay, some of this is shorter time stuff. Let me, well, I guess before I delete it, let me show you more closely. Okay, I'm suggesting if it breaks to the downside, how to trade it. But what I'm trying to point out is that I've never been a bear. So expecting this is not likely. I was just showing if you were a bear. You can even see I have this as a buy. Anyways, going back to this higher time frame, clicking all the wrong buttons. Going back to this time frame, okay, I still see reason to be a bull. This is why I have it all grayed out here, guys. This grayed out area is saying, hey, here and maybe even a little bit lower, I should be a bull. I was a bull here and here and here, and I'm really upset it didn't break resistance, but it did. All it did was drop back to the bottom of the range. Okay. Once again, guys, I'm getting lots of compliments in the chat. I appreciate that. If you want to hang with me for more than an hour every single day for no cost at all, setting up trades like this, please visit tradersway.com and open a demo account. That's all I'm asking for. Just open a demo account, takes you 1 minute, boom, you're made in the shade, okay? And then I will see you on Monday to set up trades for Monday, okay? Okay, guys? All right. So anyways, I still want and have permission to be a bull here. Now look on the hourly chart where this set up. Do you think this is a coincidence? That in this area, the bottom of the green zone? Do you think that's a coincidence that it bottomed? 1, 2, 3, 4. If your answer is no, that doesn't look like a coincidence, then you have permission for, well, first of all, you need to get out as a bear. And then also recognize this gray zone is what I highlighted 2 months ago. So obviously that price is important. Folding in the weekly target here for bears, this is forcing the bears out. And then you see I have a higher high. If you've been attending my webinars for more than, let's say, 5 years, you know that I've been teaching you this pattern, and I use an anchor for you to remember the pattern. And the anchor, in this case, it's a Navy analogy, so maybe the anchor is a great word for it. I told a story about practicing this setup, a higher high, higher low, followed by a Fibonacci, right? I gave the story of being in the Navy, and you sleep in a hammock, and you have a, so you're, right, the old kind of, I think of people in the Navy on hammocks. Of course, they're probably all on Tempur-Pedic beds, but anyways, imagine you're on a battleship, and in your room there are hammocks, and that's where you sleep. And you have a captain of the ship that just is relentless on drills. So even in the middle of the night, battle stations, right? You jump out of the hammock and you run down the hall, and you're freaking out. And you head up the ladder and you jump into your battle station, and you're all ready to go. And then he's like, oh, that was just a drill. You go on with your day. A few hours later, you're eating lunch, and all of a sudden, battle stations. Oh, you got to run down the hallway, climb up the ladder, and get into your chair. All right, just a drill. That was just a drill. Over and over and over and over, day after day after day, middle of the night, middle of the morning, while you're showering, while you're eating. They're just constantly doing these drills of double bottom, higher high with a 1, 2, 3. Double bottom with a higher high, 1, 2, 3. Double bottom with a higher high with a 1, 2, 3. Double top with the lower low with a right, 1, 2, 3. All this kind of stuff. So you get to the point where you can do it in your sleep. So while you're sleeping in your hammock, Battle stations, battle stations. You can jump out of your bed, your feet land directly in your boots, you don't even have to tie them, your eyes are still half closed, and you're running down the hallway, and you know enough to duck your head before you go under the door, and you climb up the ladder, and you get into battle station, and you're basically still asleep. This was a drill. Okay? So the secret word here is hammock. Okay? And I know I've taught dozens, if not hundreds of you guys how to do this properly. The double bottom is the one. So anticipating a double bottom at support. Well, a double bottom is a reversal pattern. So you're looking at support and you're saying to yourself, if I see a double bottom at support, the market might be reversing. Okay? That's all I'm saying. It doesn't say you have to buy. It just says, well, that's interesting. I see the obvious support, but now a double bottom's forming. Seems to me that the bears are taking profit, right? The higher high is the 2. So the double bottom at support is 1. The higher high is 2. The third part now is drawing this Fibonacci retracement. And what you're saying is somewhere between the 382 and 618 Fibonacci retracement, okay, you're going to buy. So 1 double bottom, 2 higher high, and if you get all of that, then 3 you want to buy somewhere between the 382 and 618 Fibonacci. And the secret word for that is hammock. So if you're in my webinars and someone says, oh, I saw a hammock on, euro dollar or something, that's what they're talking about. And now what we're hoping for is an extension up, okay? But the money made here is the fact that I have support drawing on my chart going back to October. Someone else might simply be trading non-farm payrolls and they don't get it. They're not on the clue train. They don't see the bigger picture of all of this. Okay. Cool. So that's gold. I don't want to be bear at support, and it looks like it's setting up technically for bullishness, which would also tell you potential US dollar weakness. And remember, I gave, 9 reasons why you should be buying euro dollar down in here and not selling it? Yeah, well, maybe now you see it, right? Sure nice to know selling it's riskier than buying it. Okay. So how about some oil? Okay, let me get rid of this. I'm not even sure the conversation going on there on oil, but everybody knows I'm bullish on oil. Everybody knows I'm a bull on oil. Double bottom, higher high. That gives you the permission. Hammock. Okay. Somewhere between the 382 and 618, you want to be a buyer. Seems pretty reasonable, right? Double bottom, higher high. Another way of drawing it, everyone looks at things differently. One way of doing it is with your triangle. You could say, okay, there's the double bottom, so you mark that. There's the higher high, higher than that high, okay? So somewhere in here, you want to buy, okay? Another way of drawing it, if you want it a different way, is to draw it this way. What you're doing is you're saying, okay, this was a high, this was a low, this is a higher high. So now you're expecting the fib of that, right? And so maybe you do something like this. You see what I mean? And your buy zone is in here, 382 to 618. See, I like to draw these things and leave myself mementos. Okay? So often on my charts, you'll see my analysis from a day ago, a week ago, a month ago, and I'm leaving myself little reminders. Okay? You see this? What am I talking about here? When we were up here, I'm like, look, it'll probably come back to support. I'm looking for things like a J-Lo, right? Or a hammock or whatnot, but we're talking about how the market reverses. If you don't know what a J-Lo is, that's what this area, a down, a sideways, and up, that's a big, wide bottom. Just think old Jenny from the block, right? J-Lo. Funny thing is, you know, my daughter and her friends, they're like, who's J-Lo? And I'm like, oh, well, they're like Taylor Swift of the OOs? And they're like, who's Taylor Swift? Oh, she's a grandma. Please, Dad. Anyways. So, look at this. What makes oil go up? Increased demand or falling supplies? I'm hoping the picture here is increase in demand. An increase in demand is going to lead to an improvement in global macroeconomics. Global macroeconomics should lead to US dollar weakness and Japanese yen weakness. Yeah, I guess Kardashian is the better. Yeah, it was J-Lo and then the Kardashians, but I don't even know the Kardashians, so I'm off. I guess I'm the old man on that one. Anyways, I want this to go up. I've always wanted it to go up. I've been a buyer since we were at 39. Let's see if I can add to this. I mean, look at all this analysis on my chart. Up or up or up has been my trade plan. I'll buy here off the 21 was a big plan long ago. I think we were still over here. I'm like, yeah, I'll buy it off the daily 21. Well, notice that was Monday. Okay. AH is throwing out a fundamental question, so I will field it. It seems like to be an okay thing to talk about because I'm talking about macroeconomics here. Why is the yield on U.S. Treasuries, it's not bond yields, it's Treasury yields. Specifically, I believe you're talking about why is the 10-year T-note at 3%? Okay. Well, how do you get interest rates to rise? Does the Fed come out and say, the Federal Reserve Bank of the United States of America declares, boom, interest rates to be higher? Is it law? No. Yields are going up because the bond market is falling. All right, Barry says it's not at 3%. All right, 2.96%, Barry. It was at 3%. Okay? But it also used to be at 1.4%. So why have interest rates in the United States doubled in the last 2 years? That's a real question, right? And it has to do with interest rates go up as bond prices fall. So what does it mean for bond prices to fall? That there are better opportunities to make money than lend it to the government or to put it in a corporate bond, which would be a little bit higher than that, right? But at the end of the day, there's just better opportunities than loaning it to somebody. For example, if the stock market goes up 10% and you're earning 2% on a bond, maybe you get rid of your bond and buy the stock market instead. So if you sell your bond prices fall if a lot of other people are selling their bonds too for the same reason, or presumably the same reason, right? So if I sell my bond and you sell your bond and you sell there are more sellers of bonds than buyers, so prices tend to fall. So flip the coin now. If holders of bonds are deciding to sell their bonds, meaning the bonds they already own, they're like, you know what? I want to cash out of this bond. And I want to buy something else that's going to yield higher than the 2%. Okay? So they want to sell it. Well, what if you're the corporation now and you want to issue a new bond? Okay? Okay? What happens then? We don't have too many buyers if people are trying to sell. And you're like, well, I want to sell, I want someone to buy my bond, basically loan me money, right? So I'm like, hey, will you loan me money? I'll give you 2%. And the loaners out there, if you think about it as a loanable funds market, they come to you and they're like, well, Wayne, I already get 2% from a treasury. And quite frankly, the stock market's going up 8 or 9% a year. And, well, I don't want to buy a treasury. I don't want to lend you money for 2%. And just buy the stock market and have it go up 8%. That's way better. But I need the money. So what do I say to the person with the money? Well, what if I gave, what if I paid you 3% interest on the loan? And he's like, well, that's a lot better, but I think I can get 8% in the stock market. Like, yeah, well, there's risk associated with the stock market. And he's like, yeah, well, that's true. And then the guy says, well, I'll tell you what, if you pay me 4%, I'll loan you the money. Okay? That's how how the bond market works, essentially. Not really, but that's how you should think of it. So the price of the bond is low, of existing bonds, because more people are selling them. But for the new bonds that come out, people that need to borrow the money, they have to attract the money. And they say, well, I'll pay you higher than before. Instead of 2%, I'll pay you 3%. Or instead of 3%, I'll offer you 4%. Okay? So that's kind of how it's working. So right now, if the 10-year T-note's at 3, it was 1.5. In just a couple of years, interest rates have doubled. Well, that means people that are loaning the government money are finding like better opportunities. So the government, to borrow the money, is going to have to pay more. They're going to have to offer more. If there's no one going to lend them the money at 1.5%, they're going to have to pay 2%. And if no one's going to lend them the money at 2%, they're going to have to pay 2.5%. Well, right now the 2-year is 2.5%. So if the United States wants to borrow money for 10 years, they're going to have to pay more than 2.5% to compensate the lenders for that kind of risk. So now they're offering 3%. And that's really kind of what's happening, okay? Does that make sense? Hopefully it does. Give you a sort of a bigger overview of the bond market. Now, when you look at the loanable funds market and the foreign exchange market, right? So when you're in university, so as you know, I study economics at Harvard, and one of the things they do is they teach you that a closed model economy where it's just people domestically making these decisions. Does a U.S. citizen loan the U.S. government money, yes or no? And if they do, or don't, prices of the treasuries for existing, right, or yields on the new issues are going to fluctuate based on what the public wants to lend to the government. But what if now the borders are open, okay? And instead, someone that can lend the U.S. government money happens to be in the U.K. or in China or in Japan or in Canada or Argentina. What happens then? So now you take down the border stuff, and now you have this idea of demand. So if an American doesn't want to lend the United States government money for 10 years at 3%, but someone in China does or someone in the UK does, then what happens is they have to convert, let's say for the UK example, the bank in London that wants to buy U.S. treasuries to earn a 3% yield, they're going to have to convert their great British pounds into U.S. dollars first, and then with their U.S. dollars purchase the treasury. And then, of course, now they're going to have to hedge that, and then they do some other things back at the bank. But the idea that now the money is going to be loaned to the U.S. government is coming from the UK, there's going to be an increase in the interbank or global market of money, the global money markets. There's going to be an increase of supply of British pounds because British pounds are going to be put into the global market and exchanged for U.S. dollars, right? So now there's more British pounds. And if they're acquiring the U.S. dollar, now there's less U.S. dollars. So that means the value of the pound falls, the value of the U.S. dollar rises. So we have to look at it first and foremost as a foreign exchange issue. And then what that does is influences bond prices, or in case treasury prices or treasury yields, okay? And that's why you want to do things like say, well, what's happening in the bond market, and then how does that affect things in the global market? And you'll find over time that as foreign exchange traders, what we often do is heavily influenced by this treasury market, by things like macroeconomics, things like central banking policy, but the bond market. So if you work at a bank, as a foreign exchange trader, what department do you work in? The foreign exchange department? There is no such thing. Okay? Tom, I don't know anything about that, Tom. Talk to support. Okay? So anyways, if you work at a bank as a currency trader, you're in the FIC department. Fixed income, commodities, and currencies. So put the whole fixed income thing first. Alex says, how much did you make last year? Wow, Alex is bold. Well, I'm a college student, Alex. I'm a college student. I'm moving into the dorms in a month. So I hope you're okay with that, Alex. But I'm sure, Alex, you made much more money than me. I'm sure you're a much better trader than me and probably a better human being. I can just tell. But thank you. So anyways, that's what's going on with that. Well, to make the top 1%, you only have to make $300,000 a year in the United States. Thank you, Reese. That's insulting. Yeah, whatever, guys. Yeah. Yeah, you only have to make $300,000 a year. So that's fairly easy. Peter, you got in the CFA course? Very cool, man. Congratulations. That's really cool. Yeah. Yeah, put it this way. Some people spend $300,000 on a yellow Lamborghini. Yeah. I spent mine on Harvard. So to each his own. So anyways, yeah, so increasing demand. So if you see things like interest rates going up in the United States. Now, if you see interest rates going up in Argentina, it's a whole different thing. Okay, but how about this? If you see interest rates going up in the United States, what does it mean? Well, you can say, well, then people are either selling their bonds or they're reluctant to loan money to the government simply because there are better opportunities. All right. So if there are better opportunities, it's risk on. And what are those opportunities? Is it the stock market? Is it the real estate market? Is it the commodities market? It must be something. And maybe it's commodities going up. Maybe it's economies around the world expanding, because you want to invest into an expanding economy, right? So you're like, well, maybe no one wants to buy the market because they're not looking for safety. They're not looking for 2% return. They're willing to accept risk because they're confident, because they're looking for an 8 to 10% return. And things seem to be good to them, so that's why they're investing that way. And therefore, put in all that in there. If the Chinese economies, or the Malaysian, or the Indonesian, or the Vietnamese economies are growing, or the Indian economies are growing, or all economies are growing, they're going to demand things like energy, right? Copper, iron ore, coal, wheat, wine, anything, right? That's a global macroeconomic play. So you could say, well, if I see yields going from, let's forget the 1.5 to 3%. What about just the 10-year T-note going from 2.5 to 3%? Because that's just happened in the last 3 months, right? What does that mean? That means that that's probably increasing global macroeconomics, increasing demand from that, and therefore probably increased demand for crude. So you should be a buyer. That's what that means. Yeah, hey, Forex Pipper just says, right, that I was correct. Thank you for backing me up. 40% interest rate now in Argentina. Okay. Now, the other thing is you should study, if you're interested in oil or the Canadian dollar or the Mexican peso or the Norwegian crown, all that kind of stuff. You should pay attention to the EIA and the IEA reports. And you'll see that inventories are falling even though they're supposed to be rising. Typically, oil inventories peak at around June 1st. I got that number because I did 50 years of analysis of the reports, of oil inventory reports. And that's roughly, June 1st is roughly when you hit the top of the year for inventories. Well, inventories are already starting to diminish. And so, oil prices are starting to go up. You can also see that since March, I've only been a buyer. In fact, probably for the last 2 years, I've only been a buyer of oil. So I'm still a buyer of oil, probably will be for a while. And here we were at support and starting to go up. So that means you probably want to look at the Canadian dollar. Canadian dollar has a big relationship or correlation with oil prices. Okay. And we've been stalled out. I Sounds like a Harvard-educated person, right? Weebin. Weebin. Sorry, I live in Georgia. Right, Matt? Georgia Matt? Weebin. Y'all. Anyways, this is where we've been the last week and a half. I've been more bearish than bullish. And looking at oil going up, this should fall. So if I were me, I'd be looking to sell up in here around 129. That's the USD CAD. Okay. Doesn't look good at the moment, so I don't have to do anything. Thank you, FX Forecast. Bubba. Hey, Bubba Pips, do you use the word y'all? Are you a y'aller? Okay, so this is going the wrong way. Now, obviously, this is a reaction to NFP. You can see that now that 4-hour 21 is holding. It is falling. It's very, very red. And remember, I told you, it's fool's gold. Who cares? Are you in control of your trading? See, here's what I teach myself. WWWD, what would Wayne do? And I say to myself, I cannot control what the market is doing. The market's going to do what the market's going to do. Now, there are probabilities of continuation and reversals and all these different things. Okay? But that doesn't matter. At the end of the day, I can only control what I do. So I have to ask myself, am I in control? Yes. Do I sell here? No. Okay? No, absolutely not. Oh, but it's red, it's falling. I don't care. I don't sell there. You can do whatever you want. Okay? You can do what you want. I don't sell there. Have fun. Have at it. It's all yours. Good luck. Enjoy. But my rules of engagement say I cannot sell there, so I will not sell there. I cannot, I will not. Sam, I am. Okay? And that's that. And I consider that part of the discipline. You got to be disciplined. Discipline getting in, discipline getting out. That was not my trade plan. I want to see improved macroeconomics. I want to see the US dollar weaken. I understand that Euro sucks right now. I understand that their economic data was poor. Early in the year, it was really good, but now it's becoming disappointing. On top of that, Draghi is talking down the euro. Look, I get it, but I'm not going to sell it there. There's absolutely no way I'm going to sell it there. So you can do what you want. I know what I want to do, and selling there is absolutely not the thing that I would do. There's no way I'm going to say, let it drop to weekly S2 and sell. It's so dumb of an idea. It's so bad. It's that there, I can't even fathom why someone would do that. I can't even think of a scenario where that'd be a good idea. All right? So anyways, I just take a walk. Just take a walk. Now, you can trade it next week. Okay? You can trade it next week. Maybe on Monday you'll have an opportunity to sell it. Or maybe it breaks, pulls back. Or maybe it drops and then rises. Do you understand? I've predicted the bottom of the month is going to be 119. It's actually 118.92 to maybe 118.30 or something. This my friend, according to my research. Now, it's not even my opinion. It's just my research. My technical analysis tells me that that's the bottom of the month for euro dollar. So what? I'm going to sell there for what? A high risk to pick up how many pips? 25 to 30 pips? Okay. I'm required by my own rules of engagement to find something else to do. Now, if you see this go up between now and Monday, all I can say is, ha ha, told you so. All right? I would like to see euro dollar go up. I'd like to see this USD CAD fall. Here we are at 29. I'd like to see that fall. It's going the wrong way. I'm not interested. I'm not interested in this. Gold just collapsed. Great. I want it to go up, not down. So got to wait on that. USD Noki. Noki's falling. Okay. That's not something I buy. Look at it go up, guys. Are you in control? Or is the market in control? Is this what you want to buy? Just ask yourself. It's amazing, right? That's what you've been waiting for? Right? That's what you want. Oh, you're like, yes, a monthly resistance pivot point in a resistance zone with a double top. I want to buy that. Like, are you kidding me? So, whoa. Then you say, well, Wayne, what am I supposed to do if I can't buy that then? Well, recognize that just because it's a green candle doesn't mean you buy it. If you wanted to buy it, you should have had a trade plan earlier. Like drag this across kind of stuff. You should have bought it down here. Well, what did we at Nokia, right? 108 something and not now. By the time you see these giant green candles, it's too late, bro. So if you buy it up here, terrible idea. Because look, if I was a bear, I would be preparing to sell this right here, right now. I'd sell it hard. I'd sell it hard. Okay. I'll get off this because I know you're not really trading this, but it doesn't even matter. I'm trying to teach you how to trade. Okay? I think if it were me, somewhere between here and here and here, so let's just draw this. Let's make it a big fat. From that top to this bottom, I can't do it now. Somehow it dropped in there. Anyways, that's going to be the top. So what do I do now then? Now I could say, look, I see these green candles. I see it all. I love it because I'm going to sell it. I know for a fact I cannot buy it. I cannot and I will not. But now that gives me permission to consider selling it, right? So what would you do, guys? What do you need to see here to sell it? What do you want to see here? Lower low, lower high, 5A cross, that kind of stuff? How about this? Okay. Now, let me put this back into perspective. Am I predicting this is going to happen? No. It's an if-then statement. If it falls, right? Here, let's just throw a candy on here. Okay, if it falls from this point, then I recognize it and I want to trade it. Okay? There we go. Next level of resistance is about there. Okay? And then at some point, because it's tough to turn the ship around, it's going to need to rise. It needs to kick off the resistance again and then drop. So maybe this is your sell zone here. At essentially the price we're at now, but with less risk associated. So like in here, there's a lot of risk associated. You're basically gambling, right? You're saying, I bet you anything it's going to fall. Well, what if it's already challenged this? So now it's not a Fibonacci move, right? Because it would be 100% retracement. So it wouldn't be bullish anymore if there's 100% retracement, right? But it is going to hit this support. So it comes back to resistance, and then it turns south at the resistance, and then you want to then sell. Does that make sense? I'm trying to incorporate multiple things in here. The most important thing, of course, is that you say to yourself, I cannot buy this. I will not buy this. I cannot, I will not. Sam, I am. Then you have to then take it over and say, well, if you get that, what's the next roll? And you rinse and repeat now instead of a 1-minute chart on a 15-minute chart. So it's going to drop down to the 15-minute 5, and then what? Rally all the way up and double top. Or rally all the way and make it to the next level of resistance in which it'll drop. And you just do it over and over and over again. So remember, they're not predictions. They're if-then statements. At this price, if it does this, then what will you do? And if you learn to do that, guys, if you hang with me every single day, day after day after day, I'll teach you to think this way. You will have the path to becoming a more professional trader. Okay? There's no guessing. There's no gambling. There's only at what price would you consider selling? And if you get that price, then what are you going to look for that will give you permission to sell it? Okay? So imagine now it makes this low, like I'm predicting, and then up. Well, sorry, not me. The technical analysis is showing. So if it comes down here and then rallies up, right, then you're selling. You're selling in that little box. Well, so remember I said it was going to be choppy, guys? A bad headline and a good revision. Falling unemployment, but falling participation rate. You see how it's weird. So what was I yelling? Gobbledygoo, gobbledygoo, gobbledygoo. Right? Yeah. FX forecast says the if-then thought process. Well, I like to think of it as scientific methodology. All right, we're already hung up on the 21. Wow, wowzer, Bowser. Okay, so anyways, I hope that's helpful. You need to really have control over your trading, guys. By the way, if you're watching this on YouTube and you're enjoying the topic and stuff, please give me a like. I'd appreciate that. Okay. I was asked if I was a bear, what would I do with oil? I'd sell it at 68.5, and I would take it down to 65. Well, let's say 66. So I'd sell it at 68.5, and I'd take it down to 66. You know what? I'll say 66.5 because of this. So yeah, so sell it at 68.5, take profit at 66.5. I know it's only $2, but it's $2,000 per contract. That's what I would do if I were me. and I would happen to be a bear. Okay, and then you wait. Hello, I love you. Won't you tell me your name? You want to do some high yield? Yazid. Mahmoud Yazid. Will euro dollar become bullish or bearish? Wow. You must have just logged in. There's no way on earth you can make me sell that. And this is not good conditions currently to buy it. But maybe on a 1 minute or 5 minute chart, you'd be looking for reversal patterns off of this weekly S2 and see if it turns around. So basically you're supporting 119. But yeah, you're a bit late, bro. Right on, RRR. So guys, if you like the webinars, I do them every single day for Traders Way clients. Just visit tradersway.com and open a demo account. Literally 35 seconds and you're done. But you can hang with me every single day. And of course, after days and weeks and months of working with me on a daily basis, hopefully you'll gain the skills and confidence that you need to trade real money, and then you'll choose Traders Way as your broker. You guys see this? Barry, I think 69 is too high. I don't, maybe. Yeah, well, yeah, maybe. Cool. Well, Carlos, I'm not saying buy the euro. Boy, oh boy, you guys are crazy. I'm saying if you wanted to, if you were bull. Like, I don't know what you do or where you come from or what's on your mind or what your strategy is, all that kind of stuff. I don't like this at all. I bought this scalp, I jammed my stop, and then it collapsed. I'm not in it because I don't like it. There's got to be something better than that. But if you were hell-bent on being a bull, I don't see why you couldn't buy it down here. But I would want to see a pattern like this. You need a reversal pattern before you buy. So if you know how to trade, which I'm trying to explain to you, it is buyable, but not like this. That's not a buy. Okay? But I'm not giving a rah-rah speech to trade it. Right? I'm trying to teach you how to think ahead and have a plan and have a strategy. What's going on, Reese? You'll be over there? Right on, Reese. Reese's Pieces, Po Pieces. Cool. Oh, I see. Well, you know, it's hard to read text and humor and stuff, right? But yeah. Yeah, I hope it doesn't fall that far, Carlos. But that's me. My filter, however, is based on fundamental macroeconomic type stuff. Where we started to get crushed was about 2 weeks ago. We had the RBA, right? The RBA, I think it was a meeting minutes. And then we had Governor Pelosi and Mark Carney, and on top of that, Draghi. Pelosi, Draghi, Carney, and an RBA meeting all came out within about a 24-hour period, and they all talked their currencies down. Yes, tradersway.com. In your back office, after you sign up for your account, there's a button that says Live Webinars. That would be the button on Monday, 7:30 a.m. New York time. That's approximately London lunch. Okay? All right. Where should we go? Oh, high yield, right? How many people here like to cover high yield currencies? Oh. Nope. Keeps thinking about it. Hope you don't mind me eating. It's just a 3-hour webinar is a long time. And I'm not much of a breakfast guy, so. Anyways, let's do high yield then. Here's South African Rand, a beautiful trade that didn't work. I'm fine with that. My next price that I wanted to sell was basically $12.50. Didn't get that either. Then on, I guess it was Wednesday, we hit a cluster of weekly target and monthly resistance. Okay. Well, Reese's Cup says, hey, what are high yield currencies? Currencies that issue a high yield, like Argentine peso. So what I'm looking at, Mexican peso, South African rand, and Turkish lira. Okay. So if I'm short USD South African rand, I'm going to earn high interest. If I buy USD South African rand, I have to pay high interest. Okay. So if you held, let's say you sold South Africa, well, let's say you bought South African rand, bought Turkish lira, right? Let's just say those two. And you threw in peso. We'll throw in peso as an exotic. So let's say you built a whole portfolio of trades that you're in. Now, right now, the last month and a half, the conditions have been very poor. But I taught people this maybe 3 months ago. I'm just going off memory. I'm not quite sure how long ago it was. But I spent a whole month teaching people. And I showed people how you could earn somewhere between, well, let's say 500%. I showed people how you could earn 500% per year on interest. 500% a year. You're lending money to governments and collecting 500% a year in interest payments. And of course, if your stop's at break even, your principal is protected and will be returned when the market reverses. Now, here's the interesting thing about this. What we're talking about is a carry trade now, right? The interesting thing is, if you buy a bond, a corporate bond, let's say, you're loaning Ford Motor Company $10,000. So you buy a $10,000 bond. And let's say you buy it at face value, at par value. So you pay $10,000, you get a $10,000 bond. And what it says is, over the next, let's say, 5 years, you'll be paid 5% per year, right? So 5% on your $10,000 at the end of 1 year. At the end of the second year, you'll get another 5%. At the end of the third year, another 5%. At the end of the fourth year, another 5%. At the end of the fifth year, you get 5% plus your $10,000 back. You see what I mean? Now, you can manage it this way in Forex. You could say, well, I'll lend some money to South Africa. I'll lend some money to Turkey. I'll lend some money to Mexico. And if you move your stop to break even, you're protecting that principal. So like if you lent it to Ford, at the end of 5 years, you get your principal back, your $10,000. Well, what if you did that $10,000, you took $10,000 in your trading account. So let's say you have $100,000 US in your trading account. Well, you take 10,000 of it and you loan it to South Africa. So you sell USD ZAR, but you're also leveraged, aren't you? Now, the beautiful thing about leverage, I mean, it is a risky thing, and you have to manage that risk appropriately. But the beautiful thing about leverage in Forex is you're collecting an interest payment. You collect interest payments, but not on the money you're using, right? If I have $10,000 at 100 to 1, I am allowed to control $1 million, right? And I collect the interest payment now on the $1 million loan. So I could loan $1 million to South Africa, but I only have $10,000 in cash of my actual cash in the market. But I'm collecting an interest on that million. So when if the interest payments were, let's say 4%, 4% on $1 million ends up being 400% on your 10,000. You see what I'm getting at? So you could build this portfolio where maybe not now, but maybe someday you could be short USD South African Rand, short Euro Turkish Lira, short USD Turkish Lira, short Euro ZAR, short USD Mexican Peso, long Mexican Peso Yen, long Mexican Peso Swiss franc, or whatever, and you just build out this portfolio, but each stop you manage at break even, so if the market ever collapses, well, you get your money back, and you just simply stop collecting interest payments. Now, in a bond, you get paid quarterly or at the end of the year, right? In Forex, you get paid every single day, which I love. But what if you were able to hold the trade for a year and you were up 1,000 pips, which is, considering over a year, pretty realistic, right? Well, now your principal's still protected because your stop is still at break even. You've collected 400% interest in interest payments, 4% on your million, for example, but you only have 10,000 of actual money in your account being used. So now that 4% on $1 million is 40,000, but you only are using 10,000 of your cash. You see what I mean? So now you got 40,000 in interest payments, but you're up 1,000 pips, and now you're like, oh my gosh, I'm up 1,000 pips. And now what is that worth? Now you're probably going to be up, 1,000%, 2,000% based on the original 10,000 you put to work, right? So I think that's the interesting thing about high yield. Now, the conditions have been quite poor for a while, but when I was teaching this a few months ago, we were like on the peso, we shorted the heck out of all of this with the talk about collecting yield. Or ZAR, going back a few months ago, I have to click back, right? We were shorting the heck out of that with the talk of collecting yield. It wasn't Euro Turkish Lira, but I think it was dollar Turkish Lira. But just imagine we were selling this, as you can see. We were selling down, 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 up, up, sell, down, 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 up, sell. Beautiful selling. But we had the intention of collecting yield. I just happened to get really lucky. For some reason, I bailed out of this, and then it was really a good thing to do. But, okay. And like the Euro Turkish Lira, I think the differential is like 6%. So it's like earning 600% a year. Okay. You see how that could be very, very, very interesting? Now, if you go back in ancient history, like 10 years ago, a Forex fund closed during the financial crisis. And it wasn't because they were doing poor trading. It was because all their investors were losing money in other places. And they got crushed by redemptions from their clients asking for their money back. Okay? But it wasn't necessarily their fault. That company was called FX Concepts. Okay? And it was the first Forex hedge fund designed, I think it was back in the late 60s, early 70s. It was a fund set up specifically to trade Forex. And John Taylor, the guy who ran that firm from the 60s to 2008, he was paying himself $25 million a year. Year after year after year after year. Okay, and they had a big firm. They were managing institutional money and pensions and all that kind of stuff. I think like the teachers union for California was an investor, that kind of stuff, like really big numbers, right? Now here's the interesting thing: they were making that kind of money and paying themselves that kind of money, and their goal was not to make pips. Their goal was simply to collect yield differentials. All they did was survive on the interest payments, and they hedged everything else. All they did was make money on the carry and hedged everything else. Was it 81? I thought it was older than that, but thank you. Nice, right? Well, Pipper, I guess you shouldn't be selling a rising market, right? Just jam your stop and take a walk. So anyways, there's resistance here. This was supposed to fall on Wednesday, and it did for a while, and it failed. I think part of the move happened last week, and that was because last week was the end of the month for last week. But anyways, this one didn't work out, and we were pretty in tune that it may not work out, just based on the repatriation flow analysis that I did in the past. So it's unfortunate, but not surprising that that didn't work out. Okay. You can see, and ZAR. Okay, ZAR is at monthly resistance, weekly resistance. Doesn't mean it's a good sell. But I would like to have evidence that these things roll over. And maybe by the end of the year, I'm heavy short on all these things. It just doesn't have to be today, right? Yeah, Ian, that would be your spread. You have to pay the spread. Yeah. So typically, like if you buy some stock in, they're like, it's $6. And you're like, okay, so it's your cost plus the $6. In Forex, in spot Forex, we don't pay that. They just add it to the spread. It's really just a soft dollar versus hard dollar cost. Okay. But imagine when I first started trading and the spread was 17 pips on a pound yen, so that's pretty cheap. Yeah, so it sounds like it's fine. Now, if you don't like the spread because maybe your stop's really close, I don't know why you'd be upset about that, or even if you are, I think it is normal. But if you don't like it, if it's an emotional thing, then you can go to the other model. Like buying stock, you just pay $6 for the transaction. Well, that's an ECN model, and Traders Way can offer that to you. So if you open an account at Traders Way, you can choose from an ECN model where there's no spread at all, or very, 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 very small spread, but you pay a commission basically, right? So that's fine. The second thing is you can have a variable spread that most of the time you get a much lower spread, but sometimes it widens. And that has to do with the interbanking system. So like around non-farm payrolls, when institutional traders stop trading, volatility dries up, risk increases, and the spreads reflect that. And the spreads typically widen around news events. And some brokers quite wide if they don't have good liquidity providers. Now, if you trade news a lot, then that would be an issue because you don't want spread to go up every time you're interested in trading if you're a news scalper. So if you scalp the news, you might want to go with a fixed spread. And what that means is if your spread is 3 pips, it's always 3 pips no matter what. If you're trading during normal times, you might be giving up a half a pip. Maybe in a variable spread, you would be trading 2.5 pips or something, right? So you're like, well, but if you're only scalping news events, and during that period, maybe the spread goes from 2.5 to 10, which would be a normal thing. You can say, well, I only scalp news events and I don't want it to go to 10. I want to be guaranteed at 3. So you'll choose a variable spread. So you might want to have 3 different accounts, or certainly 2, a fixed spread for scalping news events and a variable spread for doing your other types of trading. Okay. Well, okay. And then someone says some brokers, they advertise having 0 spreads. Well, what that probably means is they're trying to run an ECN model, and there's no spread in ECN models. You pay commissions. Like, we have 0 spread, but it cost you $3. Well, that's the same as a 3 pip spread. So it's sort of like, it's not lying, but it's a little bit of misleading information. Or if they are just straight up, flat out liars, they'll tell you there's 0 spread, and then they will charge you a spread anyways. Lastly, what some unscrupulous brokers will do is they'll tell you it's 2 pip spread or 1.5 pips. And you're like, well, that's amazing because everyone else is charging 2.5 pips. So why would one firm be cheaper than everybody else when everyone else in a competitive market? If you've studied any sort of economics or finance, you know in a perfectly competitive market, everything's going to be set at the lowest price. So how could one firm simply be lower than everybody else, even though they're more established and they have more scale and efficiencies and all these different things, and somehow some young broker is doing it for less? What is it, altruism? They're giving you the extra pip for free because they're nice people? There's no way, right? So what happens with those sort of fly-by-night firms? Yeah, they just slip you a half a pip in and slip you a half a pip out. More likely, they're going to slip you 2 pips in and 2 pips out. So you think they advertise you're getting 1.5, and you're probably paying 5 or 6. But you don't see it. They're just doing it in bad ways. And some very big brokers in the United States have been slapped for actually having it in their algorithm. It wasn't even a mistake. It was programmed. And I'm not going to say who, but there was a big U.S. broker that got very, 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 very slapped. Okay? I don't know, Jeff, why don't you give him a call? All right, so that's that. High yield. What else we got? Hello, I love you. Won't you tell me your name? Oh, looks like I was profitable on my scalp. Good job, everybody. Nice. Good job. IB. I don't know if they offer IBs. I'm not an IB, so I don't know. I'm not in charge of that. I'm just a currency trader, guys. All right, so what? So we got 1 break-even scalp and 1 profitable scalp. That could be worse. Let's do some yens. Walking down the street. By the way, I'm not sure if you can hear background noise like saws and hammering and grinding and stuff. If you do, I apologize. So I'm just looking around. Clearly we have this going up, but I'm more interested now in the top. So if you back out to a higher time frame, like a daily as an example, you'll see this little thin line. That's where price is right now. Oh, I'm not going to say. So soon. But anyways, yeah, it's not for me to say. It doesn't matter. I wasn't there. I don't have the facts, but that's what I understand to be true. Yeah. By the way, if you're a smaller trader, you don't have a lot of money, you can send an email to support at Traders Way if you have a live account. If you're opening a brand new live account and you put in less than 5,000, they'll double your account for you if you need a little extra help. Oops. But you'll have to talk to support about that. I'm not sure how that is set up for you. Just kind of looking around here. There's nothing amazing going on. I believe I bought this, and then that didn't work. So it's just sort of bumbling along. I'm waiting. I'm in that situation where I'm somewhere between a bull and a neutral trader. Even though this is falling, I'm trying to get better macroeconomics. Now, I shorted the yen pairs in January, and I told myself to get out at the end of March. So it's been all of April now and a bit of May where I would want a yen pair to go up. Like, we could look at this, okay? Let me back out. All right, so in January, I was a seller. Well, let's go back. In August, I was a buyer, and pound yen went up. But in August, I told people that in January, I would sell everything and sell it until March, till the end of March, really, right? But anyway, so here's August to December, which I was a bull. And then everyone knew I was going to be a bear. So then I was a bear, and I'd be a bear until April, in which I would be a buyer. And then, right, so it did go up. And then I said it would go up, probably be a false rally. So I'm not expecting higher highs. But what I'd like to see is the retracement and then the rise, and again, a false rally until about the middle of June. So I was correct here, but you can see there's about 2 or 3 weeks of wiggle room, but ultimately I was right. And then I said it would fall until the end of March. Well, it only fell to the beginning of March, and so there's a bit of wiggle room there. And that it would rise and fall, rise and fall. Well, fall it did, but it fell further than I wanted, and it hasn't risen yet, but it still might. Because, look, we just started May, so in 2 weeks we might be back here. In 4 weeks we might be here. In 6 weeks we might be up in this area. And then that's where I think it would collapse again. And then we move sideways around 150 until the 3rd week of August. So I'm like, I don't know how right or how wrong I am at this point. But this was a predictable move, which generally occurred. Not just occurred, but occurred kind of when I said it would. And then I knew there would be a retracement. I didn't think it'd be this big. I kind of thought this was going to be the little retracement, and then that this would go up between now and June. That's what I was really hoping for. That didn't happen. Then it dropped down to here, so I thought it would happen from this point. That hasn't happened. So now the next shot would be, well, how about 146.5? And I have to wait, but at least I know if I buy it down here and it goes up, I'm still thinking it'll go up, but it's still a false rally. Okay. And I wait. Without you. With or without you. Whoa. Yeah, well, Eternal Soul. It should be pretty obvious. That makes sense to me. Yeah. So, Kitty Cat, Oscar Mike. So I bought this, what, a week ago? 2 weeks ago? I'm wondering if I should buy it back at another one. I really want oil to go up. Yeah, I don't know. Can you hear the saws and stuff behind me? I hope not. If you do, I do apologize. Typically, I'm not doing webinars this time of day. I have a very large construction crew at my home building a movie theater and a wine cellar. I've been here the last couple of months, and it's been, you know, tough. Kitty Cat, so yeah, I got to look at this. I might want to buy a dip. It's rallying where I want it to rally. Okay. All right, cool, guys. Walking down the street. Yeah, looks like you can see the wonderful little buy. A little bit of a hammock, you see it? It's not what I wanted to do, but I think you get the idea. The hammock here. Barely, though. Yeah, so with oil, I'm expecting a low in oil prices around June 1st. Yeah, prob, fancy. Well, I suppose so. Well, Chris, I was talking about this earlier where we had multiple central banks talking their currencies down, which by default makes ours stronger, but also foreigners buying U.S. treasuries. So, for example, a 10-year Bund pays, I think, 0.7%. 0.7% for loaning Germany money for 10 years. Well, a German could also lend the U.S. government money for 10 years and get 3%. Hundreds of percents more. Okay. So also the euro got pretty strong, which kills inflation in Europe. And it was a good opportunity if you happen to be in Europe and your euro is strong and your dollar back then was relatively weak, then you're buying U.S. Treasuries with a strong euro, with probably the forward outlook of a weaker euro. Okay? But that'd be it. I was just looking at the webinar, the camera. Someone asked me where my Panerai was yesterday, so I wore it for them, whoever it was. I don't know if it was Brooke. Anyways, there it is. All right. Here's the problem with CAD. Is anyone a bear on CAD yen? Because that's the exact price you'd want to sell. 85.50 was the short of the month. So if you're trading this off the top, price action top, pivot top, pivot top, pivot top, pivot top. Okay? So if you believe it's heading back down, now I've been ignoring it because I kind of want it to go up. But if you are a bear, that is crazy obvious. First of all, crazy obvious. You should have shorted it on Tuesday. And that's your target. So you're going to take it from 85. So let's just change it. Let's just predict the shoulder is going to be off of 85. Okay, let's do it this way. So you're going to sell it at 85 and your target is 81.50. Maybe 81. Your call. No, I got knocked out. All right, so what currency pairs would you like me to cover in the last 20 minutes? By the way, if you guys haven't done so, please give me the like on YouTube. Is Trader's Way good? Well, what happened during the Swiss National? What happened, Dieter, when the Swiss National Bank lied to everybody and dropped the market for the euro yen by something like 5,000 pips in a day? What happened to many brokers? Many brokers went out of business or got in a lot of hot water and had to very, very quickly borrow money. FXCM had to borrow, what, 500 million was it? Just to cover the losses they had that day. Alpari went out of business completely. Trader's Way had no problems whatsoever. And what does that mean? Well, it means when you click a button and execute a trade, they put it into the interbanking system immediately. They don't trade against you. They don't hold you trades. There's no like, what do they call them? B buckets, your B pools. What do they call them? You know, where you have one pool of traders that you never execute your trades because you know they're going to lose money. The B books guys. There's none of that. You click the button and your trade's executed into the interbanking system. And I know that to be true because that's why when the market collapsed and a lot of brokers were going out of business and a lot of traders had accounts that were not only zeroed but were like mega negative, Trader's Way was totally fine. So, you know, I forget who asked the question, but is Trader's Way good? Well, there's one definition of good. It does what it says it's going to do, and it doesn't trade against its clients. Well, that sounds pretty good to me. But again, I don't run the back office. I'm not a senior executive that way. I don't sit and like ponder those things. It's not what I do. So ultimately, you're going to need to decide for yourself. But that's a pretty open and public way of understanding. All right. Hey, how am I doing now, bros? How'd I do? Remember, it was going straight up, and I said, there is no way in the world you should buy that. And then I set this up, lower low, lower high, lower low. How did I do? Guys, do your own research. Come on, let's focus on trading. Okay, I got a lot of people doing questions here. Anis says they could not recover negative balance, but the thing is, why did they have negative balances? That's the whole thing. My equity position isn't? What do you mean? That how much of the company do I own? None. I'm not a director. I'm not an owner. I'm not a shareholder. I'm not anything. So don't worry. I'm not an IB. I don't get paid to like get you excited about over trading your accounts. Don't worry. I do this because I love you. All right, so pound Aussie, euro Aussie, euro yen. Well, some of these I've already done. Pound Aussie. I did pound Kiwi, didn't I? Is that the first one I did? Euro Aussie. I thought we did most of these guys. Well, what euro pound Aussie, I think one was. All right, so let's just, these are crosses I don't typically trade. So let's do it this way. I guess probably I have it here. Pound Aussie, huh? Seems interesting. Okay. Well, 1 second of analysis tells me that there's no way in the world I could sell this. Okay. Okay, that's the first thing. To my pound Aussie brothers and sisters. Oh yeah. Yeah, oh, I have no problem, Eternal Soul. Yeah, it's a good question, but you know, I don't own the company. No, it's not mine. All right. I'm just a college student, guys. I'm just a currency trader like you that also has to restructure a corporation. I have to write a proposal to restructure a whole corporation's culture, and it's due in 4 days. So that's what I'll be doing after trading's done. Would I still short USD Noki? Well, I already drew everything out for you, so the rest is up to you. All right. First of all, at the beginning of the month, on the first day of the month, we knew this was bearish. This is a good clue. Okay. The second thing is every swing trader on the planet knows that that's a sell zone. And then, of course, any trend trader is going to fib this, okay? And for them, this is their sell zone. So it seems to me it's pretty much the same thing, right? That you would either sell it about 1350 or what? Sorry, 179. No, this is 82 though, right? You'd sell it around 82.30, or you'd sell it around, can't see that, 83.50, 83.47, 83. Gee whiz, 67. Okay, so this whole window here is your sell zone if you're a bear, right? That's very, very, very basic swing trading, guys. If you don't know how to swing trade, there is a swing trading course. I think it's 12 hours long at fxbootcamp.com. Anyways, you should know how to swing trade, right? So there's that. But that's long gone, right? So you're like, well, Wayne, that's great. What about now? Well, what about now? This now predicts that you stop selling. It could fall further. It may fall further. It might fall further, and probably even will fall further. So what? Okay. Now, if you happen to be a bull, what you need to now see is that hammock. Do you guys remember the hammock? Now, you get the double bottom is 1, the higher high is 2, the higher low is 3. That's your 1, 2, 3 hammock. And that's what you'd be looking for as a bull. So maybe on Monday, you'll be able to buy it down in here. Okay. So Dieter says, hey, it'll go up. Good. That's how I would do it if I was me. You have two choices, Dieter. You buy the double bottom, which is high risk, or you buy the double bottom 1, 2, 3 hammock, lower risk. Okay. But what I'd rather you guys do is learn how to swing trade. Because if you knew how to swing trade, the easy, obvious pips, if there were any, I'm not saying there is, but if you were a bear and you set up a swing trade, that is like, by definition, what a swing trade is. And this is the money you should have made. Making decisions now is way late, way after the fact. Bears are supposed to get out, but we don't know if they will. And bulls, what are you doing? You're buying a falling market? That's not good trading, right? That's not good trading. Where would your stop go? Yeah, it should be below that. Yeah. Okay. So if anything, this predicts consolidation now. But if we got something closer to this by the end of today, I might buy it just to see if I can take it around over the weekend. But I don't like to do that after NFP. Okay. Okay, Ali says, or sorry, yeah. Faraz Ali says, when does gold go up? I don't know when it goes. When anything goes up, I know what price it'll probably go up. Okay. So I already did this. Okay. So you have to figure it out. I already covered this in great detail. So from this analysis, you'll have to figure it out. Or go back and watch the video. Okay. Boom. How about this one? Does anyone remember me saying that I'm a seller up here? That even though it's going up, that's not what I want? I hope you can confirm that. I hope you're also learning that even though I see green candles, I don't necessarily buy. Even if I see giant red candles, I don't necessarily sell. I'm trying to get you guys to think ahead, have plans, have biases, have prices in mind, and be in control of your behavior. I hope that's your takeaway today, that next week and the week after you're going to practice this if-then type statements. And if you want to practice with me for free every day for an hour and a half, spend 45 seconds and open a demo account at tradersway.com. In your back office, there's a button that says Live Webinars. You can attend my live webinar Monday morning at 7:30 a.m. New York time, Tuesday morning, 7:30 a.m. New York time, Wednesday morning, 7:30 a.m. New York time, Thursday morning, 7:30 a.m. New York time, Friday morning, 7:30 a.m. New York time. All that for 45 seconds worth of effort. Bob says, which pivots am I using? Good question. Let's pick a clean pair. Let's just pick up this one. This green area, Pav, is weekly pivots. And then I think you can see this gray line inside the middle right here. That's a monthly pivot. Okay, 7 minutes, how can I help? Let's use the 7 minutes wisely, guys. I'm glad I showed you how to scalp. Okay. Another thing, I don't know if you're experiencing price action, this down, 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 up, up, sell idea. One way to expand on that is you got the double top and the drop. Once you have a lower low, look left, find your old support, drag it across, and it should be your future resistance. So you're down here when you do that. Up, 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 sell, sell, down, 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 down. Right? Look left. Drag your old support across. That's your new resistance. So you would have done that here. So it retraced back up. Sell, sell. Down, 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 down. New lower low. Look left. Drag your old support across. That's your new resistance. Up, up. Sell. Down, down. We haven't even formed a lower low yet, but you can still drag this across. And in the next 10 minutes, you'll probably get something that looks like this to some degree. Down, up, and you're going to look to sell. Okay? Easy peasy lemon squeezy. All day, every day. So let's kind of use this as a recap. This was going straight up like a rocket ship. And I was screaming bloody murder to not buy it. That only a fool would buy something like that. That it's fool's gold. Then I actually shorted the top as a scalp and created this secondary trade plan for you, which is to let it come down, let it rally up, and then sell it. I even drew the box. In this case, it didn't fall quite as far as I wanted, but it did retrace. So down, 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 up, up, sell. And then the price action is the follow. Down, 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 up, up, sell. So what you should be thinking is, when you're at this bottom, your new plan is to sell like a retracement. Then it should make a new bottom. And when you get that, it should make a retracement, which, right, then should extend down, should make a new lower low. Down, 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 look left, right? It should retrace. You sell it there. The retracement should create an extension down, which it is now doing, and at some point it will come back. And that's called price action. So I just taught you in an incredibly bullish market how to scalp. How do you feel about them apples? How far do I think it'll drop? That's a whole different question. Better question is, because I mean it could drop forever, right? What time frame and all that kind of stuff. How far will it drop today is another question. And the real question on top of all of those questions is, where's the next level of support? I see support here. And there's a weekly pivot here. Let me back out a little bit. And ultimately there. This gray zone is actually a buy zone for bulls, so I probably stop selling anyways. Okay? Just think about it. Remember that price action I just covered? Remember? High, low, new higher high. What is a bull supposed to do? What did I just teach you on the bearish side? When you have a higher high, look left. Your old resistance should now be support, right? And so we're just, instead of doing a 1-minute chart, this is simply a 15-minute chart or an hourly chart. But bulls are thinking this. Now, we don't know if bulls are correct, but we know that that's what they're thinking, because that's what a bear was thinking trading this price action. But at some point, and probably some point soon, you might get a situation where in this retracement, instead of retraces, makes a higher high. So now you have to set up the higher low, inverse head and shoulders, and start longing back to the top, which would be back to the old resistance, right? Now you're looking at a 15-minute chart versus a 5-minute chart, or even versus a 1-minute chart. Okay, that's the fractal nature of the currency markets. So you could almost 3-wave correction this down and then extend it up. So it's not like it should fall forever. It's like that's where bulls are supposed to take profit. So what I was doing was I was stop hunting. I was selling into the bullish stops because I know no one's going to have the guts to buy it so close to resistance. And I know the smart bulls are taking profit. So I know smart bulls are getting out, and let's say less experienced bulls, they didn't get out, so now they're nervous. So in this case, I'm just simply hunting stops. But I know whoever was up here, they're going to buy it again there, and they're going to take it back up. So I'd probably stop scalping down in here, right? Faraz says, so the higher high is a confirmation of reversal. Well, on whatever time frame, if you're trading bearish setups, higher highs by definition is not bearish. Now you might just change the time frame and from a 1-minute to a 15-minute chart and say, well, that higher high is simply a Fibonacci retracement of this move. So if you were a buyer and you did buy here and after a higher high and it got up into like this area, you need to stop buying and probably jam your stop because bears are going to sell it here. And we don't know who's going to win the war. So you need to decide whether you're a bull or a bear, because a bull is going to buy here, a bear is going to sell there and there. I know because I know how to trade. And it is now 10:30. So thank you to FX Street for hosting Trade Non-Farm Payrolls Live 145. I appreciate working with them. I've been Forex Speaker of the Year, Forex Blogger of the Year, Forex Special Event of the Year, for most valuable participant in their old social website. So I've been working with FX Street for, I think, 13 years, and I appreciate working with them. They're good people, and it's a good website. Thank you for working so hard to become a successful currency trader. If you'd like to hang with me every single day, whether you're successful or not, whether you're trading a live account or a demo account, please visit tradersway.com and open up an account, and I will work with you Monday through Friday at tradersway.com. The link to the live webinars that are 7:30 in the morning New York time happen to be in your back office. Yeah, Charles, let's meet around, we'll meet at noon for our swing trading group, okay? Cool. So if you're watching this on YouTube, please do the thumbs up. And thank you. Just thank you for how hard you work every single day to be a good trader. Let me just tell you that it's worth it. Okay? Forex is worth it. Before becoming a Forex trader, I was a venture capitalist. I've looked at thousands, literally thousands of business plans. There's nothing better than Forex. So stop looking and commit. It's worth the fight. So peace on earth, may the pips be with you, may your profits be above average. And if you're part of the Traders Way family, throw your diamonds in the sky. Have a wonderful weekend. Thank you again, FX Street. I'll see everyone on Monday at forex.today.